Well, thank you so much for joining us today, Mr. Shaker.
Pleasure to be here.
First of all, I'm going to ask you, for the benefit of our listeners, could you just give us a brief overview about Shaker Financial Services?
Sure. At Shaker Financial Services, we manage separately managed accounts for clients, and we fill those with balanced portfolios of closed-end funds almost exclusively. And what we do is we try and do something called discount capture, which to us means we buy funds when they are artificially wide. Then once they narrow, we sell them and we replace them with a new fund that is wide at the time. And that way we're able to get an additive from all the discount captures in addition to the expected return of the underlying NAVs.
Great. And then second, since the founder of your firm, Richard J. Shaker, PhD, has such a distinguished background, of course, can you tell us about the team of investment strategists and portfolio managers at Shaker Financial Services?
Well, not many people who met our founder, my father, would not say that he was the smartest person they ever met. So not surprisingly, his quantitative strategies are still the cornerstone and will always be the cornerstone of everything that we do. Currently, and in the future, we try and build upon those, though. And so, for example, our other portfolio manager, Daniel Gordon, we plucked him off the Philadelphia Stock Exchange because he can bring a new perspective to everything that we do, a little bit different from the strategies that we first started.
Great. And then also, as a boutique firm, which features distinguished Shaker Financial Services from the competition.
I think pretty much our CEF knowledge, our attention to detail, and our commitment to active trading. You know, we joke that there's this thing, CEF land, and a lot of people come and visit CEF land, but we live there. And we stare at the screens all day, and that gives us the ability to be a little bit more nimble when it comes to finding something that's widened out, an attractive discount. Even if it's just for an hour, we're typically there.
Right. Hopefully you have some ergonomic eye exercises that you can do.
And a swollen trading finger.
And then what are some of the key principles that define the management philosophy of your firm?
Under the leadership of our managing partner, Catherine Baumer, we've tried to do two things, which is focus on specialization while still allowing for synergy. By that I mean, if a person focuses on their core competency areas, for example, performance or client support or compliance, we also want them to come every day to work with this concept of what can we do better as a firm all around. And you'd be surprised how many times someone from the technology department might have a great idea on how to find an attractive discount, while a portfolio manager might come up with this great way to better do client support. So, you know, just being able to do all of that together is pretty much how we try and do our management.
Wonderful. What types of investors can best enjoy the financial counsel your firm provides?
Pretty much anyone who has a mid to long range investment horizon and wants a balanced portfolio. Our composite is about 60 bonds, 60 equity. We go about 20% leverage. And as long as you have that, we think we can always beat any other place that does that same type of balance because of our discount capture. We take anything from 401ks, IRAs, to taxable accounts. So if you have that, if you're looking for a balanced approach, those are the type of people who can benefit from our investment advice.
Great. And then with regards to the funds your firm manages, what is your outlook for 2015?
Well, on the equity side, we realize we're always a bit tied to the whims of the markets. But as long as we have steady U.S. GDP growth, positive corporate earnings, we think there's a lot of reason for optimism and growth out of the equity markets. But it's the bond side that we're really excited about and really optimistic about. Even going back to the taper tantrum of 2013, bonds have widened, so they're at historically wide levels, and we think that over time, as people start to abandon the TINA philosophy and realize that it is good to have a balanced portfolio with bond and fixed income positions, we should get a general tailwind that's helping us through.
Great. And then also, what else would you like listeners to know about Shaker Financial Services?
I'd say, I guess the only thing is that we ourselves are not a hedge fund or a mutual fund or a closed-end fund. My day-to-day life would be a lot easier if we were, but we're separately managed accounts, and that's from our founder, who believed that if you really want to serve clients, you need to have the flexibility to let them be anywhere they want to on the risk preference spectrum.
Right.
And so we allow the clients to pick their balance. We work with them to help them pick the balance, and you know, that's something like most of the things the founder started, that we're not about to change.
Great. Well, lastly, I'm just going to ask you, what is your view on the Pristine Advisers Conference today? How do you think that it could benefit not only advisors but investors as well?
I think this, I don't know, this is my third or fourth year at this conference. It's a great conference. But one of the things that I tell people is the closed-end fund world really is a little bit different than other places. And it is so nice to be here with people who are so much camaraderie. And even from the individual investor to another investment advisor, we talk. We share ideas. It's not this proprietary kind of, well, this is what I do, don't talk to me. I have great conversations with people who do exactly what I do, who should be my competition. If an individual who's just starting out or is not an investment advisor but just an investor comes up and asks a question, we'll spend 15, 20 minutes just talking to them about it. It's a really nice atmosphere.
Great. Well, thank you so much for coming back this year, and hopefully we'll see you again next year.
Thank you.
All right, thank you so much.
Thank you.